We looked at Bitcoin in the past 24 hours. It was around that 106,344 mark. We saw fairly negative price action and then we witnessed quite a sell down. Bitcoin is currently 100,233. The question is there more negative downside to come? If the first thing you've done is just reach for the news in Google, unfortunately you're looking at the wrong thing. The answer is always inside the charts, but you need to know what charts you need to look at. The crypto market has come down quite considerably. We can see Doge nearly down 10% and XRP over 10% down. Is this a crypto-specific issue? The answer is unequivocally no. If we look at crypto bubbles, we can see unequivocally that there's been a really large sell-off. And if you're looking to get into Wazirax, please be careful. It's being delisted from Binance and it has legal concerns. If it was a crypto-specific sell-off, we would not be seeing sell-offs inside the main market. You can see the main market is basically a blanket of red, except for Nvidia and a few others in healthcare. I'm going to help you to get an institutional view on the markets. We're going to go through the cheat sheet, which will explain exactly what has happened and what could be happening coming up. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. When you look at the CTKS method service watch list, and this is available inside the link in the description, you can see that the VIX actually spiked up 74% in the past 24 hours. That is an unheard of spike. And I'm going to take you through the cheat sheet and show you exactly what the spike in the VIX did. We can also see that the DXY gained strength, which gave strength to the yields. When the yields come up and the DXY comes up, it's very common for gold and silver to get hit. We'll look into those charts as well. And as anticipated, when the VIX spikes up, junk bonds will spike down. When we go down a little bit further into row 3, the major indices, they were all under pressure. And the futures are a little bit scattered at the current time, which is actually a good thing. They're digesting the sell-off currently. Does this mean we should go in with both feet? Well, let's just take it easy before we get into that. When we look at row 4, the stocks, we can see all the stocks were down. Tesla was down over 8% and MicroStrategy nearly 10%. The crypto market in its totality came down over 6%. Bitcoin down around 5.7%. Ethereum down 7%. And when we look all the way down row 6 and row 7, we can see we're starting to get double-digit negative gainers. Into the memes, a couple of double-digit negative gainers there. And the thing that you need to look at is the row 1 references all the way down the bottom. Look at this, 244%. These are very green, and ugly green at that. This is suggesting that over the next week or so, we could very well get follow through. Now, what do I mean by follow through? We've seen that the crypto market has come down because the VIX spiked up ridiculously. Now, even though the VIX spikes up, it's normal for a retracement before another wave up. And that can all happen within a 24-hour period, so please beware. Right now, the impact and probabilities are for another dump incoming. But there could well be a bounce before there's a dump. Looking into row 1, which is the VIX, the DXY, US dollar, Japanese yen, or dollar yen, 10-year, 2-year, and oil, we can see that the VIX absolutely went psycho, a technical term. And when the VIX goes psycho, what typically happens is that the DXY will follow its lead. They're kind of like puppets to the DXY. Well, the DXY is kind of like a puppet to the VIX, and dollar yen follows the DXY. Typically, when you get the DXY coming up, you'll also see yields coming up as well. They all kind of work together. Now, these are all really bad things because when the yields spike up, that's really bad for gold. If you got the added benefit of a spike in the DXY and a spike in the VIX, you're pretty much guaranteed that everything is coming down. Therefore, row 1 is looking really negative. Row 2 is kind of risk on. When we look at junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper, what do we see? Junk bonds did a cut under. It did many cut unders, in fact, and we had a capitulation spike to the downside. What happened to gold? It just plummeted, and this is what we anticipate. Don't forget, in a 24-hour period, it depends where you measure from to see if something is positive or negative, but we can see unequivocally this is bad. Gold got whacked. Silver got whacked. Because the 10-year and the 2-year and the DXY came up, that absolutely whacked gold and silver. If you're trading in gold and silver and you don't understand the intercorrelations and interrelationships between different charts, for example the cheat sheet, you're at a huge disadvantage. Also, we saw the euro dollar weaken further dramatically, and the Aussie dollar has been selling down wildly. This is all thanks to our friend the VIX. Naughty VIX. When we look at action like this, we've got to figure out how much the dip can go, and there's always opportunities. So if you're borsogging and you're borsogging around, which is buy on red, sell on green, if you're doing that kind of stuff, you can do incredibly well, but you need to know where the structural levels are. You can see how the DXY exploded. The gopher, yeah, he went for his whole burrowing. What about the fiber? It just died. The Aussie died. The Kiwi died. The cable died. And the loony went loony. Gopher went for, the clouds basically. So what are we seeing here? People are stuffing their money into the mattress. That's how I like to look at a DXY spike. Now, what happened to crypto? You can see crypto is this blue line, and that's Bitcoin. What did it do? It just sunk. Now, the issue is, do we expect more VIX volatility to the upside and more DXY volatility to the upside? If that is the case, we would expect crypto and the stock market to fall further. If we don't expect that, if we expect a retracement and a continued retracement, well, that's a different thing. So we need to stack probabilities. Row 3 are the major indices, the S&P 500, the NASDAQ, the Dow, and the Russell. And what did we see in the last 24 hours? A capitulation spike to the downside inside the S&P 500. Inside the NASDAQ, wow, that is a massive sell-off. Inside the Dow, inside the Russell. And also, when we look at the S&P equal weighted index, it just died. The All Country World Index followed suit. Everything is coming down. One thing to understand, when this actually occurs, what are people thinking? They're not thinking buy the dip. They're thinking, oh my God, it's gone red, I must sell. The buy the dip will come later. The US indices lead the entire world, and if we're getting a pullback in the indices or a sell-off or a capitulation spike down, look at what was happening to crypto, the blue line, Bitcoin. It was all coming down. We're seeing a little bit of a dead cat bounce at the current time, but this is not significant. We would anticipate the global market indices will follow. For example, the ASX, the Nikkei, the DAX, and right across the world. We've noted Dow weakness and Russell weakness recently. Combined with the basing in the VIX that I've been speaking about for a while, and that huge spike on the VIX was something to behold. One thing to understand, the spike in the VIX was not normal. This is not a normal spike in the VIX. This is a terrible spike in the VIX. Now, what do I mean by terrible? If you get a spike in the VIX, you are likely to get further spikes up. Literally, yesterday we were just at the start of something, and we've seen in the past 24 hours a huge spike. Does it mean it's going to keep on spiking? Well, likely it will come down and create some rallies inside different markets, and then if it's going to follow through, it will lead to another capitulation spike downwards in crypto and the indices, for example, the stock market. That would further push up the DXY, which would further bring yields with it, and gold and silver would be anticipated to fall, not rise. But if you don't do the cheat sheet, you wouldn't actually understand any of this, which would put you at a huge disadvantage. Now, let us go back in time. For example, you can see this huge spike here. That is a monumental spike. And when we had the Japanese carry trade unwinding, it went all the way to 66. This big spike is huge. It is utterly huge. It's starting to rival the COVID spike that we saw in March of 2020. In that time, we saw the price of Bitcoin fall from about 10,500 all the way down to under 5. Now, what does it mean? Should you panic? You need to be mindful. This VIX spike is a big issue. We don't typically get spikes like that. I traded the VIX for many, many years. If you get a spike like what we've just seen now, a potential follow-through is highly likely. And that means you want to be really serious about your positioning inside the markets. And for example, if we go backwards, you can see these big spikes, they typically follow through, and we're only 2 days into it. Could we get something like this where it decays? Absolutely, we could. Keep your eyes on the structural levels. We're always looking at three-dimensional analysis in what we do. If we get a big spike, you can see big spike, a retracement, and another big spike. That means that the markets could actually go positive in the next 24 hours and then get whacked the day after. You must be prepared for these things. We are professionals. As professionals, we actually look at all the things that could go wrong and position ourselves. Typically, when you get a spike over an area of resistance, you get follow through. And the spike that we just saw is actually major. It's a major spike. There have not been that many spikes of that magnitude throughout the entire history of the VIX. Now, does this mean you should run and hide underneath your bed? Absolutely not. There are going to be days of double-digit percentage gainers, but you must be careful and you must be very structurally aware how you look at the market and how you time your entries and exits. If you're an investor, hey, you could get some really good Christmas bargains. To understand how significant this VIX spike is, we need to look structurally, and we need to continue to go through the cheat sheet. In row 4, we look a little bit deeper into the individual stocks such as Apple, Tesla, Microsoft, and Nvidia. In row 5, we also look at MicroStrategy. I've just put it in here because it's easier to look at. When you look at Apple, Apple has come down hard as the VIX has spiked up. And this has continued throughout all of these top names. And of course, MicroStrategy got hit as well. Coinbase Global also got hit. This is what the VIX does. If you were keeping up with the cheat sheet, you already knew this was happening and you positioned yourself days ago. Looking in to row 5, which is the crypto market, total crypto market cap, Bitcoin and Ethereum. MicroStrategy was covered just before. We can see that the total crypto market cap just got whacked. Bitcoin also got whacked. This is the impact of the VIX. The VIX isn't confined to the stock market. A lot of crypto people would have you assume that it's just crypto is independent of everything. It is not. Please don't get sucked in. When we look at Ethereum, Ethereum has come down hard. Total crypto market cap, excluding Bitcoin and Ethereum, market capitalization has come down quite substantially. Just excluding Bitcoin, it's come down a lot. And USDT dominance has fallen off a cliff. I should say the inverse, because when we look at this, we're looking at the flow of stable coins into the crypto market. They've spiked up just like the DXY, so we invert this to give us a directional signal. I'll explain much more about that in the Profiting from CTKS Method Structure course that's coming out on Christmas Day. It is your Christmas present from Kate and I. And like all good Christmas presents, you get it absolutely free. So it's actually worth $700 but if you register and you obey the conditions inside there, you can get it for absolutely nothing. So what's one of the conditions? Be a member of the service. As we go through all the different cheat sheet rows, row 1, row 2, what we actually do in practice is look at the cheat sheet rows structurally. Looking at them structurally is incredibly important. All these rows mean a lot. You can see the VIX, it just absolutely spiked up incredibly. It brought the DXY with it, the Japanese yen, the 10-year, the 2-year, but oil decreased. Junk bonds got whacked, the euro dollar got whacked, Aussie dollar got whacked. Gold and silver sell off, as did copper. The S&P 500 and the Nasdaq and the Dow and the Russell all under a lot of negative price momentum, as was row 4, Apple, Tesla, Microsoft and Nvidia. Bitcoin and Total and Ethereum and MicroStrategy all got hit. This is the power of the VIX. But you can sense the power of the VIX by looking at the futures indices across row 3. Also cross-comparing the DXY and the US dollar, well, dollar yen, and the euro dollar and the Aussie dollar. They also give you an indication. You can gain a concept of VIX strength through gold and silver and yields as well. In other words, all of these 32 charts move together. And the key is the structural level that impacts each chart. I anticipate we're going to get a lot of liquidity shocks right across the next coming days, so please be aware of this. When we look at total crypto market cap, we can see it came down. But how significant is this? We know from a retail level, people would just assume that this level would hold. But what was the actual structure? Was it there? Not really. The real structural support was up here, and total crypto market cap failed to hold it. It cut through it, which meant the VIX was likely to spike and spike hard. One thing to always keep in mind, these strong clustering of SLs or Stanfield levels or CTKS levels as they're also called, if they get cut through, it means that in other parts of the market, things are shifting around. You must take a lot of notice of this. I did. In the last 24 hours, I took a lot of notice of this, and you need to as well. When you see these negative CTKS gaps, what can happen is price can move very, very quickly through them because there is no structure to hold them until we get down to structural support levels, as we've literally just hit on total crypto market cap right now at around that 3.4 trillion. Now, what does it mean from here? We've filled that negative CTKS gap, at least to the downside. If we find that the VIX starts to spike down and does a retracement, which is really quite normal, and you'll find this all the time. If a crypto goes up 20%, it's likely to fall about 10% or 5 to 10% the next day before continuing to go up, at least intraday. You must be aware of natural price wave movements, and I'm going to talk about that a lot in the Profiting from CTKS Method course as well. So you can see these structural levels are good. But this is the concern. The fact that we cut through there very, very quickly just pointed to the VIX spiking up like a nutcase. And nutcase spikes generally have follow through, so we must prepare for more negative downside action. But as with all things, we have three-dimensional thinking. Because we're professional, retail can only hold one direction in their mind. It's either going to crash to zero, it's going to go stratospheric, and that's it. Please do not think that way. After being inside financial markets for nearly 40 years, I can tell you, of course, I thought that way at the start as well. Everybody does. But over time, you just realize it's just a wave-based function between structural resistance and structural support levels. If it doesn't hold a level, it's going to be negatively structurally attracted to the one below. If there's a big gap between them, you could get quite a substantial sell-off. If there's a smaller gap, it's likely to flip around and consolidate. If you've got a lot of them, that's better than having few of them. But you must think also in terms of the positive case and also in terms of consolidation. Most people just basically think, I'm going to say, it's yes or no. That dichotomous logic is not going to hold any profitability inside the markets for you. You must have three-dimensional price awareness. You must realize that if the VIX actually calms down, which it could because it spiked by literally 100%, if it spikes up and then comes down, that's normal because things get overextended. That could create a small rally. But if it just comes up, and we would see that through the futures of the major indices. That's why I said, please keep your eye on them. You can see there's a lot to this trading and investing from a professional level. At a time like this, we need to keep our eye on the capitulation indicator. What have we seen through the VIX? That's that inverted VIX in the background, that red line. This is almost like the Japanese carry trade unwind, or curry trade as I like to call it. Is this the end of it? Will it just flip back up? Perhaps, perhaps not. It is a rather large push on the VIX, and unfortunately it just cut over. We are not seeing any fear-based capitulation inside the crypto market, and we're of course not seeing any topping action either. If we were seeing topping action, we would see some green down here. Capitulation action, we would see some red down here. We're not seeing anything like that. Please be aware that when we get these large spikes, we could get even larger spikes. This is the time where you can make life-changing wealth. So many people in the crypto market said, oh, I wish I had bought Bitcoin when it was down here, 16,000. Wow, I would have made so much money. What if you get the opportunity again? What will you do? Will you run away from the market like most people do during capitulation, or will you be smart money and leaning in? Please let me know in the comments. And the comments yesterday were awesome. Please give them a read. It's like, well, if I was going to tell my former self what I could learn when I just started off in trading and investing, what would I tell them? And the people inside our community are incredible, so knowledgeable. We are not retail, we are professional. What I'm doing here is just alerting you to the present that we could get more negative downside action. Because if you look at previous capitulation spikes like this in order of magnitude, there haven't been that many. And when it starts to come down, Bitcoin is typically just wobbling around saying, I don't know, I'm not sure if I'm going down or not, and then it goes down. And you might think like that from there to there, Ken, that's a blip. Let's zoom in. That blip that we just looked at was literally over a 20% fall. It doesn't look much on a log scale, but it's a lot. And if we got the same kind of fall inside crypto, we could revisit 80,000. This is something to just bear in mind. It doesn't mean we're going to 80,000. It means that you should be prepared in your mind that if we went to 80,000, what would you do? And even if we went lower, what would you do? The only thing that you can realistically do is keep your eyes on the structural levels. They really matter, as you saw with total crypto market cap. Okay, let's revisit Bitcoin. We saw that we were around the 106,344 mark in the previous video, and then we had that big sell down because the VIX just spiked like a maniac. Now, what is the structural levels, or what are the structural levels underneath? If you don't know where the structure is, you do not know where the support structures are. If we get negative CTKS gaps, we can fall really, really quickly, and that freaks out the vast majority of people. And just a few things to just consider as well. Total crypto market cap had really strong structure. We had that strong structure around the 104 mark. When we lost it because of the VIX, the DXY, the US 10, the US 2. Most people in the crypto space will be talking about Bitcoin and how it reflected past cycles and, oh, please, don't bother. Ken, how can you say that? We should bother. Well, you can look at it, but it's really the intercorrelation between charts is what you need to look at the moment. Why is that? Because we're in completely uncharted territory. We've had so much Fed stimulus and stimulus around the central governments, or central banks all around the world, just printing money right, left and center. This environment has never existed. I'll put some levels on here, some level labels, so you can see approximately what those values are of the lines. When we lost the 104 level, we had a negative CTKS gap, and we lost because of follow through and structural overshooting. This is very, very common. When you get a negative CTKS gap, you can overshoot those levels to lower levels. This is always on. And people who use the CTKS method consistently can see that all the time. It's called momentum. And you can get it to the upside and also to the downside. When it's to the upside, we don't mind so much, but when it's to the downside, it's not very nice. Okay, so what are we seeing? This 10871 mark is already starting to confirm itself as structural resistance rather than structural support. If we got above there, that could be pretty cool, but we're seeing just basically natural retracements in the market at the current time. Remember that all price moves in a wave, so what do we need to keep our eye on now? You can see as we come down, the next structural level is that 99,934. If that holds, we may become range bound for a little while, but if we start to lose it, it's going to be another negative CTKS gap to 97,180. And there's not much structural support around there. You've got that 95,786 mark, and then 93,684 and lower at 92,732. This is the downside probabilities that we're looking at the current time. You'll find that when we hit structure, especially if you've got a negative CTKS gap, you can overshoot and go to a lower one and wobble around before resuming down. As they get stronger, that is an actual barrier to it going down further. It just means that there are more buyers around these levels, and you can see that lower one at 90,632. A lot of people would have wished that they could buy Bitcoin at $90,000, but now if the potential is that it goes there, probably the same people will say, oh, I don't want to buy that. That is normal. And also, it's very retail. We need to get rid of that thinking. Instead, it should be like what you do in real life. If you want to pick up a car, you're not going to pay more than the retail price, are you? You're going to want a discount. You're going to go in there and say, nah, give it to me cheaper. If it's a $100,000 car, you'll want it for $90,000. But when it comes to financial markets, you're not touching the car if it's a mere $100,000. You only want it at $110,000. Hey, how crazy is that? Let me know your thoughts about that in the comments. That's a pretty good thing to chat about. Looking at row 6 of the cheat sheet, which is Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic. What we can see, the blue line is Bitcoin. As Bitcoin was coming down, what was Litecoin doing? It was gravitationally attracted to it. What about Bitcoin Cash? Did it come down when Bitcoin sold off? Yes sirree, it did exactly. What about BNB, Binance Coin? Yep, it's coming down. Ethereum Classic. Now what does this mean and what is the rule? The rule is no alt can escape Bitcoin's gravity. You're seeing what that actually means. Looking into row 7, which is ADA, Cardano, Solana, Sol, Dogecoin, and XRP. Note the blue line, that's Bitcoin. What was ADA doing as Bitcoin was coming down? Well, it couldn't escape its gravity. What about Solana? Couldn't escape the gravity. What about Dogecoin? Couldn't escape the gravity. What about XRP? Couldn't escape the gravity. You're getting the idea. But so few people actually understand this about the crypto market. Bitcoin is the king. If Bitcoin is failing, the alts are failing, but they're not failing at the same percentage as Bitcoin does. If Bitcoin comes down 5%, it's likely that your alts will 2x or 3x or 4x or even more that decline. But of course, it goes the other way in terms of advances. That's why we love the alts. It's very good to look at the memes, and we can see as Bitcoin came down that blue line, everything was coming down. Doge came down, SHIB came down, Pepe came down, WIF came down, Bonk came down, and Floki came down. Now, why do we look at the meme coins? Because the meme coins give us a really good indication of retail sentiment, and they are most likely to recover first. Therefore, they have very high liquidity, there's a lot of money in them, and they have people just FOMOing in and FUDing out as well. Therefore, they're very sensitive to risk and very sensitive to sentiment changes. So please keep your eyes on these 6. They can give you a really good insight if things are improving or if they're decaying further. What I would do personally is just to keep your eye on the structural levels. Keeping your eye on structural levels is a literal game changer. If you get negative CTKS gaps, pay attention because there's a huge amount of volatility and a likely structural overshoot. And that goes the same way with a positive CTKS gap. You can really take advantage of those gaps. I'd also suggest you keep your eye on these particular row 1 references from the watch list. You can get the URL from the description of this video. We want all of these things to go red, not to go more green. Inside financial markets, if you feel yourself in the panic zone or the blame zone, that's zone 1 and zone 2. Those zones are where you lose money because basically people want certainty, and that requirement to have certainty terrorizes them. Why does it terrorize them? Because price is going up and down in a wave-based function between structural resistance, structural support, and structural resistance. How on earth could you get certainty from that? And when people, and they will offer you certainty, they're absolute BS artists, because anybody who's been in the game long enough, over decades and decades, knows the probability and rules are the only things that apply to these markets. Therefore, you will go through a degree of learning. You will need patience and rules, and also you need to master fear. That's really difficult to do because when it comes to putting money into the market, you work really hard to put that money in and to get that money in the first place. If you lose it, you're going to be angry. You will want to revenge trade. You will want to make back your losses. But there is always a time and a place, and that is around structural awareness and intercorrelation and interconnection between charts. You cannot make the market do what you want it to do, and when you're inside zone 1 and zone 2, you think you can. When you're inside zone 4, you don't even care about it. You just say, I can't wait till this thing goes up, because we buy at spot and go long at spot, so therefore we're looking for positive price momentum. In times like this, it's very important to reevaluate and focus on your learning. Many people will say, I bought the dip and it keeps on dipping. They have no structural awareness. Please make sure that you look at the structural levels. If you're unsure how to get the structural levels, you just go across to CTKSmethod.org. The link is in the description of this video. And then just go across to here, the 33 trading view indicators. And just in here, that's where you want to sign up. Having structural awareness will absolutely save you a fortune. Not just in time, but in potential losses. And losses are just knowledge taxes. And when you learn how to read the cheat sheet through, you'll see things that other people simply will miss. It will put you at a professional level. But just know, the direction and momentum is one thing. You must know the structure that sits underneath all of these charts. If you've made it to this point, you're an absolute legend. It's been a fairly long video, but I thought there were so many things that I just needed to discuss with you. So if you're up to here, please let me know how you found structure and the application, or if you could help other people understand it better, that would be good as well. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.